welcome to Silicon Valley 2.0. I'm your host, Sabrina Halper, and on behalf of the Hindustan Times, I want to welcome our very special guests, Runik, Mehrotra, and Samir, Vasavada. Thank you so much for being here today.
Thank you so much for having us.
How are you guys doing?
Great. Yeah, it's a beautiful day.
Okay, so let's get into it. Runik, you were raised just outside Detroit. You went to UPenn and you dropped out to found and act as Chief Investment Officer to Vise. And Samir, you're originally from Cleveland and you are the Chief Executive Officer at Vise. So together, you co-founded Vise, which essentially automates portfolio management using artificial intelligence and machine learning. But I want to start from the very beginning. You two met each other when you were 13 years old.
Yeah,
we did. We met at a summer program at Northwestern. We proverbially met in our dorm.
Okay, and how did you start working together?
So, in the Midwest, there's not a ton to do. And we both kind of got bored of school. So we decided, let's build apps. We both like iPhone apps. iPhone apps are hot. Let's build apps out for small businesses. So we started doing that together and building apps out for these different small businesses, making money at a pretty young age. And that got us really excited and kind of into entrepreneurship in a way.
So what did the original business look like? You were teaching AI could you tell us a bit about that?
So we tried to start a company right off of our app development business. Our original business, we were building apps out for small businesses. And then we tried to see, could we use AI to automate the buildings of apps for small businesses? That business, unfortunately, did not work out. Really difficult technical challenge. But one of our advisors at the time had been this investment banker. And he'd said, hey, there's all these really interesting consulting opportunities in artificial intelligence around investment management. And you guys might be interested in consulting with big investment banks on how AI works. So we started consulting with really large investment banks, so like MassMutual, RBC Royal, Deutsche Asset Management, and they're paying us kind of hourly fees. And as we were doing some of these projects, we were really learning about finance. And one of the kind of unique things that we learned about was wealth management. We noticed that it was one of the biggest markets in the world. Financial advisors were considerably very dominant in the financial services industry, and they were the dominant distribution channel for kind of all of these different financial assets. But most financial advisors were really great at relationship building. They're great salespeople, but they weren't necessarily great investment managers. So you're like, how can we help advisors succeed by automating their investment management so they can focus on what they're great at, their sales and their relationship management?
Got it. And I just want to pause for a second. I'm curious, at that age, how did you guys have such a good understanding of artificial intelligence?
It's an interesting question. So we spent a lot of time just very interested in the space, really young. And so we spent a ton of time just reading materials and spending time with professors. Also had research opportunities at top institutions, and so spent time with them as well. And so I think we had enough of an understanding where we could really explain it in a way that made sense for people who didn't have understanding, associates at investment banks, managing directors, et cetera, who wanted to understand, what are the commercial impacts of the technology, not how do I go really deep around neural networks and their layers.
Totally. And could you pretend for the viewers that we were one of your corporate customers? In a few sentences, how would you explain artificial intelligence?
Yeah.
Take it away, Samir.
I would break down, first, explain what is AI, right? So many people think that AI is this Terminator-esque thing. But there's different types of AI, right? There's general AI, which is kind of that Terminator-esque thing, which doesn't really exist yet. But we mostly focused around narrow AI. So it was AI, or it was machine learning, there's different types of AI for specific kind of use cases, right? So pattern recognition on a specific set of data. So predict I don't know, if you've got a whole data set of corn output, right? And based on the output of different, if you're a farm, based on the output of different corn per month, you can predict what the corn is going to be the next month. That is a example. Or facial recognition, just given a bunch of data sets of different people's faces, you can identify who someone is. That's an example of narrow AI, a specific use case.
Got it.
Yeah, the way I explain it is with most algorithms, you start from the beginning and you tell it how to get from point A to point B. And so you're okay, we need to have a set of rules that we're going to follow to get from our current position to point B. With AI, you start at point B and then you give the algorithm all of the data, and then it figures out the right way to get from point A to point B.
Okay, that makes sense. Thank you. And where's Vise today? What are you guys doing? And how does your AI approach differ from what most advisors are currently doing to build a client portfolio?
Yeah, great question. So Vise right now is in this extreme growth state. We've got a little over 30-something employees based in New York, scaling. So we're partnered with some of the biggest financial services institutions in the world. So like Charles Schwab, TD Ameritrade, soon to be Fidelity. And we're managing like tens of millions, hundreds of millions of dollars for clients. How our approach is very different. So typically in the industry, financial advisors give their clients very generic portfolios.
Yeah.
So mutual funds, ETFs, investments that aren't at all personalized to their clients' needs. They're expensive, they're hard to manage. They just don't give their clients much of a reason to succeed. Whereas what Vise does is provide a highly personalized approach to building and managing portfolios to clients. So let's say the client only wants to invest in companies with female representation on the board of directors or good water practices, like an environmentally sound company. Or they work at Facebook and they have Facebook stock in their portfolio, will reduce exposure to technology and reduce exposure to Facebook to balance out the portfolio risk given their private holdings alongside kind of their ethical concerns. But so it's personalized around the client's kind of values, goals, kind of dreams, all their needs, but in a highly automated way. And then we are able to provide the intelligence, so this intelligence layer, where we're able to explain the why, the story behind investment decisions, so advisors can educate their clients as to here's why you're investing what you're investing in. And they can kind of have that underlying explanation. Because so much of what an advisor does is explain to their clients their investments. It's kind of like a therapist in a way. So we help them do that.
Got it. And just to clarify, are you managing money on behalf of the investors, or you're providing the software to private wealth managers?
So we are the software, but we're also the money management layer.
Got
so
it.
If the advisor has assets, they are basically giving it to us as their manager.
Okay. And we'll touch on that more. For now, I want to ask you, how did you come up with the idea of doing this? And most people your age aren't thinking of investments in RAs and... Yeah,
a lot of it came from like the interesting consulting opportunities that we're doing with large institutions. We were tipped off on like how big this market really is. Like there's $100 trillion worth of wealth managed in the United States. It's like hard to fathom how big that number really is.
Yeah.
It accounts for 50% of Morgan Stanley's revenues, a third of Goldman Sachs's revenues. And so it tipped us off to, okay, wealth management's this massive space. The technology hasn't changed in like 40 years. And so we spent a lot of time thinking about, okay, what can we do to improve that? And a huge piece of like our consulting opportunities was how can we use AI to improve wealth management? How do we build more customized portfolios for our clients? And so it seemed like the natural next step to build that product for institutions. And so we started building that product for institutions. And then over time, it evolved to actually a product focused around independent financial advisors.
Got it. And why do you think this product hasn't been put in place before you guys?
I think first advisors were really adverse to technology.
Yeah.
I don't think that this industry was necessarily the most tech savvy industry. And now advisors are adopting technologies in other areas of their practice. So like CRMs and portfolio accounting tools and things like that. So they're more willing to adopt it in terms of investment management. And I think the next reason is, this entire industry had been built on top of like simple kind of fund-based investments.
Yeah.
But now clients' financial situations are getting so complicated that doesn't necessarily work in terms of like all of the nuances given someone's finances. So they needed a next-gen approach.
Is there any data or evidence that using AI improves long-term performance on investments? Because I read that after 15 years, nearly 92% of active managers are still trailing the passive index.
Yeah, so the approach we take is not an active one, right?
Okay.
It's like a mix between active and passive management.
Okay.
And so because of that, we're allowed to customize this portfolio to the client's need. And so really the focus is, can we build a portfolio that accounts for all of the things that they care about and still do it in a way where we're not eroding at the initial portfolio value like active managers do.
You can almost think about it as building a better index.
Yeah.
So it's a customized index for every client.
Got it. And who is your target client today?
So typically like registered investment advisors. So they're independent financial advisors. They might have left a big investment firm So the Morgan Stanleys and Merrill Lynch's, and they run their own books. It's interesting because it's such a big market. Like, these guys manage like upwards of $30 trillion in the United States. They've grown at like 15% a year. And they still operate almost like small businesses.
And ultimately, who would you hope your client to be? Would it ever expand into these more major institutions?
I think everyone. I think the whole idea is we want to build kind of the next evolution of asset management. We think RIAs are the ideal starting point, but eventually we want to be able to service everyone.
Got it. And let's look forward to the future of the field. Do you see a trend towards giving people more control over their investments and retirements, or less control through passive investment vehicles and ETFs?
It's definitely more control, right? So like historically, it's always been, can we move things into things that are automated and make it easy for the advisor to spend less time managing money? But as a byproduct of that, now financial advisors give their clients things that are like really non-personalized, and they're pretty off the shelf. And so the next big wave is mass personalization. So that's happening in the industry via what's called separately managed accounts. And so we sit on top of these separately managed accounts and build and manage portfolios that are individual to each of their clients' needs. So we think the future is towards personalization now that like the automation layer has already been built.
Okay, thank you. That's really interesting. And when you first arrived in Silicon Valley to get funding and to pitch your idea, what were people then, that was like 4 years ago, projecting as the next phase for financial industry? Did they see this coming?
No. So the narrative in Silicon Valley was financial advisors wouldn't exist, and that the human relationship didn't matter, which was very wrong. It was proven wrong pretty quickly, because these robo-advisor companies, I'm not going to name names, but they sought to like kind of get rid of the financial advisor and go direct to the consumer. But what they saw was after a certain net worth, people wanted a human to talk to about their finances, and the technology wasn't enough.
And in terms of the investing world in general, do you feel like there's other spaces linked to investing where there's a lot of opportunities for growth, for personalization, for automation?
Yeah, I think so for sure. I think a more general trend of artificial intelligence is to take things that like are pretty table stakes and make them very personalized to someone. And so, we want to continue to do that.
Got it. And what other ways do you think that could be done?
Yeah, I think around better financial planning for someone. So asset management is only one component, but if you can create a more comprehensive financial plan based on artificial intelligence that accounts for all of these different needs that a client may have, and then over time continuing to customize around different things. And so really the focus is like, trying to build an intelligence layer on top of our platform that is like super personal, customized, even around like explaining things. Samir has this interesting vision around building like a Google for your portfolio, where someone asks a question, how would COVID affect this portfolio, or how does the Oracle buying TikTok affect this portfolio, and then they get this like super personalized, rich kind of like result that explains why that would be the case.
That's really interesting. That seems very cool. I hope that happens. So let's talk about the pandemic. I'm curious to know, have you seen an acceleration in the use of your financial technology since it began?
Yeah, I think we've seen a lot of acceleration. I think we've both seen acceleration in the growth of the business. I'm saying, we've hired quite a bit, we've raised quite a bit of money, but we've also seen acceleration in terms of like the uses of Vise, right? During a pandemic, and let alone during kind of just any kind of an economic crisis, more people are looking for financial advice, right? And financial advisors become more handy. So like financial advisors actually saw growth during 2008, and we think they've seen growth now. So financial advisors have seen growth, and they're also looking to reassess what they've currently done. And we're a good alternative. Yeah,
I feel like when everything gets shaken up, it really creates new opportunities to automate and to push things forward. That's very exciting. And I want to talk about fundraising, because you guys, your first outside capital was a $20,000 check from Dorm Room Fund. And since then, you have raised almost around $18 million in funding from some of the top VCs in the world. And with a Series A led by Sequoia. And I just want to ask you, what have you learned about Silicon Valley since you arrived in terms of funding and, how to make that happen for yourselves?
Yeah, I think it's an interesting question. I would say Silicon Valley idealizes young people trying to rebuild an industry that's archaic, but also I think the one thing that we learned is that you have to present a vision for the world and prove it. You're not talking necessarily to people who have like their own vision.
Yeah.
And so instead they're evaluating like, what's your vision for the world? And like, what's the possibility that happens? And for us, it was better telling that story around financial advisors are here to stay. And there's this incredibly important human relationship component that comes with wealth management that isn't going to disappear, and that the current companies that you've invested in, like robo-advice platforms, aren't actually able to replace or emulate that effect of sitting down with someone and talking through your finances.
Got it. And did your approach to fundraising change along the way from when you began?
Yes.
Yeah, absolutely.
Please tell us about that.
Very much so. I think fundraising in the beginning was just two people, like they're just investors taking a bet on two people, like purely taking a bet on the two of us.
Samir and Runik.
And I think that as time changed, people were more taking a bet, both on us but also on the business.
Yeah.
And like the size of the market and the opportunity, and the growth of the business and the metrics, which is an interesting change.
Yeah, totally. And originally you had reached out to almost 1,000 investors, and I'm curious, how did you get interest to 1,000 investors? Because a lot of people even struggle at that beginning stage.
We didn't get intros per se.
Yeah.
We did a lot of cold emails.
Okay.
Yeah.
We eventually figured out the intros.
Got
so
it.
Building relationships with a handful of people that can connect you to everyone is the easiest way.
Yeah.
Because then you don't have to spend too much time at cocktail parties getting to know people.
Yeah, your average investor gets so many cold emails and things like that, and so it's just you don't have their full attention when you're sending them a cold email, and so there's like a 99% chance they don't respond. And so we realized it just like isn't the right way of fundraising and getting in front of the smartest people in Silicon Valley. And so we spent a ton of time building relationships with people, especially, the biggest hack we learned is like build relationship with founders who are a few stages ahead of you, because they know all of the people that you're trying to meet. And there's so much you can learn from those people who are a few stages ahead of you as well.
And how did you keep going when you faced like the initial rejection of, not getting responses to cold emails or getting no's?
I think like great companies are built on top of grit. And I think you just kind of can't quit. So we just kept on going at it, just improving the strategy.
Awesome.
Yeah, we also I think we benefited from, because we were so young, like there wasn't really we didn't have a family to support or anything like that, and so that's also very helpful. You don't have
to lose.
Yeah, exactly. You don't have the stresses of being a 35-year-old entrepreneur. Is things don't work out, you have to move into a box on the side of the road.
Yeah, and I want to touch on the point of being young. I mean, Silicon Valley is known for its myriad of young founders, and I think you guys are probably among the youngest in that range. And how have you felt that your age has affected your experience or your treatment and your ability to close the deal? Has it differentiated you and made it cool? Or have you ever felt people didn't really take you seriously?
I think it has differentiated us. I think initially we didn't get taken seriously.
Yeah.
But I think that was a good challenge to overcome. And then I think that now it's a huge positive for us, because people look at it as they've accomplished so much now. What are they going to accomplish in 10 years?
Totally. You're just at the beginning.
Yeah, exactly. We're just at the beginning.
Got it. And I want to ask you guys about some personal insights and from your experience of doing this. What has surprised you the most about yourselves in the process of this? And whichever one of you can begin.
Hey, start.
So I used to quit a lot.
Yeah.
I didn't like tennis, so I quit. I didn't like violin, so I quit. And I think I thought I would quit earlier on, but I guess I just did it, which was an interesting. I didn't see things through before, but
that's really cool.
Yeah, for me, I think it was managing people for the first time and spending time doing that. And I've realized I've gotten much, much better at that over time. Early on, I can't imagine someone someone wanting to report to me, because I was probably not a great manager. But today I think I've gotten much better at that. So the one thing I've learned about myself there is I've really learned to understand the things that other people care about and helping them do that. The one thing that we've learned about this company is that Samir and I are never going to be the best people at any function. We're never the best people at sales, marketing, any of these different functions. But we can go out and recruit the best people, and our goal is to help them do that as well as possible. There's a professor at Wharton, his name's Adam Grant, who talks about this idea of servant leadership, where basically to get all of these people to come work with you, they feel like they are accomplishing more with you than they ever could on their own, even though they're so much smarter and better than you are. And so like spending a ton of time helping them accomplish so much more with you than without, I've learned that personally is like the best way to like attract top talent.
Got it. That's really interesting. And did you guys feel like there were any stereotypes around being a founder, or like what you thought being a founder would be, and being young and being your own boss, that were totally debunked once you were thrown into the reality of it?
Yeah, it's very much a grind. It's very hard work. It's not very glamorous.
It's not all glam.
I think that like being a founder has been painted as being glamorous. You're on the cover of Forbes and all these fun interviews, and like that's not really how it works. Just a lot of like very long, like sleepless nights trying to solve problems.
Yeah,
that's the other thing is I think like if someone asks me like what's a founder feeling like, it's like there's no problem too small that you have to solve and no problem too big. Like you have to solve problems at like this entire range where it's like, when we just opened our office at the 84th floor of the World Trade Center in New York, like we had to deal with like Wi-Fi issues. And so it was like going up, grabbing our like Eero box and trying to reset it and solve the Wi-Fi. But also at the same time, we're partnering with a Fortune 50 financial institution, and like figuring out how to do that is also, a very big problem. And so I think the biggest thing that I learned is that you have to be able to operate at any level of that stack.
And putting out a lot of fires, it sounds like.
Yeah, of course.
And this is going to be my last question. What was one piece of advice that you were told along the way that you hold very close? And like the more that you are in this, the more you find the truth in it. If there is one.
It's a great question. I think it was a recent piece of advice. One of our board members had given us. He's a partner at Sequoia. And really wise guy.
Yeah.
And he was like, you can make any kind of mistake and you can always recover it except for a mistake of integrity. There's like one thing that's important above all else, and that's integrity.
That's so interesting. Yeah. That's great advice.
Yeah, the other piece of advice, same person. This is for anyone listening. And his advice was, there's only a couple things you can ever focus on at once, both you and the rest of the company. And so when people say, hey, I want to do 3 things this week or 5 things this week, it's likely they're only going to ever get 2 of those things done.
Yeah.
And so tell them, don't do the other 3, just focus on the first 2 and make sure those things get done. And I think that it seems super simple at first, but like that piece of advice is actually very valuable because it's an exercise in focus. Like there's so much to do in a startup and it's so hard to stay focused. But if you can, then you can like do all these amazing things.
Yeah. Okay, thank you guys so much. And thank you, Samir and Runik, for speaking with me today and for, giving us your advice, your insights, and all of that. And I really look forward to the future of Vise. I'm very excited to see where it goes. And thank you all for watching today.
Thank you.
Thank you so much
for having us.